After a dismal debut, the hotly anticipated blockchain built by ex-Facebook staff, Aptos, surged 36% over the weekend. Crypto custody firm Anchorage Digital is the preferred institutional custodian for Aptos Labs, which is behind the Aptos blockchain. And Anchorage Digital General Counsel Georgia Quinn join us right now. Georgia, welcome to the show. So yeah, some interesting stats on Aptos right now. I mean, it was valued at $2 billion. The market cap is now sitting around 1.2, 1.3 billion. But maybe you can tell folks, what is Aptos? What does it offer compared to other layer ones out there?
Hi, first of all, I just want to say thank you so much for letting me join you this morning. So really, when we think about Aptos, and I know that, part of the discussion today wants to be around the, recent uptick in the market price, and I think that is not an important characteristic of Aptos. We really looked at the underlying technology, and remember, this is like Aptos rising from the ashes of Diem and Libra, really. And so Anchorage is a technology company first and foremost, and when we were first involved in the Libra project, what really attracted us to that project was the tech itself. Now, you can talk about the marketing issues and the regulatory issues and all of the other things that kind of led to that demise, but at the end of the day, the tech is still the same, and this new base layer protocol is, it really offers a level of security that, we really have only seen in the other kind of top players in the marketplace. And so, we're excited about it. And I think Peter Brandt kind of hinted at this earlier today in your show, in that we're not in this for like the next year, 2 years, 3 years. We're here for the next 100 years. And we really think that this, this token will have a place in that ecosystem.
So
Georgia,
are you saying that it's basically, a continuation of the Libra Diem project in terms of the tech there, and is it a security?
So for us, that's one of the primary issues that we look at. I'm not myself, an engineer, so I'm the general counsel. I think it's got a lot of other great factors going for it as from a regulatory perspective, but I think first and foremost, yes, it's the security and the tech that we really look to when we're thinking about supporting and providing our services. Because again, remember, Anchorage is a federally chartered bank, so it's really obviously in our best interest and the interest of our clients to ensure that the tokens that we support, first of all, that the underlying protocol has the integrity to scale and function as an ecosystem for millions and billions potentially of users, but to be able to do that in a safe and secure way. And so we work hand in hand with the token developers to ensure that the custody solution that we have will do that, and will do that in a way that doesn't inhibit the token functionality.
So, you brought up Aptos's origins, or we brought it up, its origins in the Diem and Facebook's disastrous rollout. Let's be honest here. It was not just a disaster. It actually precipitated a lot of regulatory concerns, both in the United States and the EU and all over the world, that Facebook will get involved in stablecoins. How should regulators approach stablecoins? I think you guys want more clarity when it comes to stablecoin regulation. What would that clarity be, and what would it also mean for algorithmic stablecoins, which also were disastrous just a few months ago, nearly destroying the crypto market with the collapse of Luna? Do you think that it should, for instance, they be banned because there's no assets under custody?
So, first of all, I have learned to not speak ill of the dead. But on the stablecoin point, I think we need to be very clear about what a stablecoin is, okay? Algorithmic stablecoins are neither algorithmic nor stable. So, I don't need to really spend too much time talking about that. Stablecoins, however, play a very, very important role in our financial ecosystem, and a growing role, I should say. When I say stablecoin, I mean a fiat-backed, 100% reserved stablecoin. And this is a way, basically, I think the best way to think about it is it's a way to get the US dollar onto digital rails. We need to get it into the digital ecosystem so that it can transact and trade the way cryptos can. Of course, there are going to be a lot of, requirements, regs that need to come into place to ensure that that's happening. There's obviously a big question who should be able to issue a stablecoin. We feel pretty strongly that it shouldn't have to be a bank, but it should be a technology provider that works in tandem with a bank that's going to provide that secure custody for the underlying fiat assets. I think Patrick McHenry and Maxine Waters have a great bill that's been proposed to address this. And I hope to get some traction on that as we, move into the next administration or after these midterm elections. So, I think definitionally we just need to be very specific about what we're talking about when we say stablecoin.
Also, I just want to get clarification. Is Aptos a security?
No. In my opinion, no. And we have done, our own legal analysis, obviously. We do not have clear guidance from any regulator, describing this asset. But from our analysis, and obviously we utilize outside counsel, we feel that it is not. Now, at Anchorage, we have the luxury because as a federally chartered bank, we can custody both securities and non-securities. So, to the extent at some point this asset is ultimately deemed to be a security, it doesn't really, hurt our position. But I think it would have detrimental effects to the marketplace, at least in the short term.
You also have a bit of news here. So Anchorage is launching a way that you could build with Anchorage to link every business to crypto. Tell us what's going on here.
Yes, so we're pretty excited about this, and this is our Build with Anchorage program. And as you guys know, Anchorage Digital provides a custody infrastructure, and that's really kind of our claim to fame. That's how we started this business. But what we found over the years in dealing with our institutional clients is that they need more than just the base layer custody. They need ways to interact with that and to build their own products on top of that. And so we've been able to build some really, really great infrastructure for our clients, and also solve a lot of the regulatory, a lot of the regulatory issues that they've been facing, and that frankly, Chairman Gensler has been concerned about. And so some of those issues are when using a crypto exchange, you generally have to pre-fund your account. Well, in the split seconds even that you're doing that, those assets are leaving what's called a qualified custodian and now being held on potentially an unregulated exchange. And for a registered investment advisor or other types of investment professionals that are regulated by the SEC, that is not acceptable. And that's actually a violation of law. And so what we've built is a way to kind of, for lack of a better way, plug in underneath the exchanges so that the exchange has visibility into the client's assets and can put a lock on those assets until the trade is actually settled. And so the assets remain in Anchorage secure custody, qualified custodian, and the exchange has full transparency to ensure that those trades will be able to clear and settle. And that's just one of the many things that we're building. But it also solves Chairman Gensler's concern about the full stack approach to crypto companies at this point. So if you look at the securities markets, if you as a person go and buy a security, there could be literally 10 to 15 intermediaries in between that. Now, for crypto, we're hoping to get rid of several of those, but you probably need more than one because there truly are certain conflicts of interest between an exchange and a custodian. And so by putting us as the underlying kind of foundational layer that other exchanges can sit on top of, we eliminate those, conflict of interest concerns.